Hello, I'm Debbie Bell-Hosking for Finextra TV, bringing you part of our Sibos 2024 series. And I'm joined by Angie Walker of Chainlink Labs. We're going to be chatting about all things blockchain and tokenization. So Angie, a big welcome.
Hi, thank you very much, Debbie.
I mentioned their tokenization, so let's start with that. What tokenization use cases are you the most excited about?
Okay, that's a pretty tough question to ask because there's a lot of them. So I'm going to try and keep it really concise. There's a couple of particular types of tokenization use cases that I feel very passionate about, which I think will be very transformative. So I'll just keep it really quick. In the existing world, we're seeing a tremendous level of growth around the tokenization of things like money market funds, fixed income funds. And the reason that that's incredibly important is that we have historically not been able to move things like collateral, high quality liquid assets, T-bills, that sort of thing, very easily. But what we're now able to do is by tokenizing things like high quality liquid assets, we can move them instantaneously on the ledger. And why that's important is it means that assets like treasury bills, like short dated bonds, that sort of thing, can now be used for other purposes, such as posting margin. And so we're able to start leveraging assets in a very different way, of sort of liberating them intraday or interday to be used for other functions during the course of sort of trading operations and making them more valuable, as well as the value of the underlying asset itself. So that's in the existing world. If you look in the new world, tokenization is very important because if you look at some of the more complex assets like ESG instruments or like structured finance, infrastructure, large in scale commercial assets, then they have a lifespan which spans potentially many years or decades. And what we want to be able to do is not only monitor the creation of those assets. So if you pick something like an ESG instrument, we're not just trying to verify and validate things like the sequestration phase of ESG. You know, is it a true reef credit? Was it sequestered from the reef in which it claims it was sequestered? Has it been attested appropriately? But we also want to be able to use smart contracts to monitor and attestation and data oracles to monitor and maintain the integrity and the representation of the asset over its life. And we're doing that using a combination of smart contracts, data oracles and cross-chain interoperability, because many of those assets will traverse multiple chains during the course of their life, and we need to keep the smart contract and the asset in sync throughout its life journey. So there's different reasons why tokenization is important, but the combination of the smart contract, the data oracles, the attestation, and being able to allow those assets to flow freely between chains during their life cycle are really important and very game-changing for a number of different asset classes within banking and capital markets.
You're talking about change, you're talking about innovation. So I have to ask you then is how are blockchains unlocking post-trade innovation?
Yeah, so post-trade's a really interesting space. I mean, obviously post-trade's very complicated and it does depend on the asset class. Some asset classes have a post-trade life cycle that's actually quite efficient. But if you look at certain types of asset classes, the post-trade life cycle historically has been quite complex. So even if you pick securities, for example, we're doing a lot of work in the security space to effectively accelerate delivery versus payment. That's for a number of reasons. One, to reduce the risk associated with the settlement stage of the process, which we can do through accelerating the actual post-trade workflow on chain. The second one is that we want to be able to free up the liquidity by settling sooner and putting that liquidity back into the capital markets ecosystem to increase the amount of trading we can do. And the other one is really around delivery versus payment as we move much more towards digital currencies. So we can, at some point in the future, when we've got CDBC wholesale in circulation, start to imagine a world where we can facilitate the entire life cycle of delivery versus payment atomically on the ledger. Now, we're not there at the moment, and people like DTCC have done great work in accelerating or reducing that period down from 2 days to 1 day, and being able to support smart contracts to drive that process from the point of matching to the point of settlement, being able to provide data to update the obligations during the life cycle is vitally important, and we work very hard to make sure that we stay in sync between the data and the smart contract. And then once we can start to deliver digital currency to the ledger, being able to provide the atomicity between the cash and the asset, again, is vitally important. And we've done some great work with people like Swift on showing how we can facilitate, it's in the public domain from last year, and we continue with that very exciting innovation journey to show how we can deliver the entire life cycle seamlessly integrated into existing infrastructures like the Swift MT500 series. So there's some very exciting work in the transaction space, and in the data space we're working on unified golden records, and we've just finished a very exciting program of work with Swift and Euroclear and a number of market participants to show how we can start to combine blockchain technology with AI to start to create out of very unstructured data unified golden records. And where we showed that to be incredibly valuable is in managing corporate actions. So corporate actions are a great responsibility for a number of market participants, and what we were able to show is we could take really, really unstructured data, and through the use of large language models and blockchain for dissemination and for consensus, we were able to, through CCIP, distribute that in the form of a unified golden record. So I think both in the transactional space, and particularly with the emergence of digital currency on chain, and in the data space with this ability to combine AI and blockchain and cross-chain interoperability, we're seeing some really, really exciting innovation that we're doing primarily with financial market infrastructures and consumers to improve both the data quality and the transaction life cycle itself.
And it's so interesting. I mean, I'm smiling because it's just so nice to hear about all the different stages.
Yeah.
It's been really interesting. And of course, there's that one word that keeps popping up, innovation. So with hundreds of blockchains being launched, how does the industry overcome fragmentation?
Yeah, it's a great question, actually. And I come from mainstream capital markets where I've spent the last 30 years, and I've seen what fragmentation does. Well, we saw it with MiFID I, right? I mean, it had a really big impact on the market as a whole. So it is a big concern. And in fact, the very reason I joined Chainlink was because I was extremely concerned about fragmentation as the number of chains started to come into existence, and as it became very evident this was never going to be a sort of Betamax VHS type journey, I realised that for any single financial institution, it was very likely that over the course of time that they could potentially have tens, hundreds or even thousands of chains. And we're already seeing that with some of the more progressive of our customers who are innovating in lots of different areas. And so one of the reasons that Chainlink have spent so much time making sure that we can provide secure cross-chain interoperability at a level of security that's persistent and fit for purpose within capital markets and banking and highly regulated type use cases is because we absolutely want to be able to unlock that liquidity and that free flowing of assets and cash between the various ecosystems that are starting to emerge. But it is a very important point that you raise, because it's not just about blockchain to blockchain. Okay, there are 50 years of significant infrastructure that are here to stay. They're not just going to evaporate. Okay, we're not going to flick a switch and everything becomes decentralized. These infrastructures have got to learn to coexist, and we've put a lot of effort through our blockchain abstraction program and enterprise abstraction to ensure that we can relieve people of the obligation to have to keep building all of these interfaces to different technologies. And what we're actually giving people is the opportunity to integrate once into our platform, and then that allows them then to be able to get access to all these different types of ledgers and chains, as well as traditional technologies, in order to facilitate the flow of assets and cash in a very highly secure way across the CCIP protocol. So we cannot build blockchain-based applications that can only exist on one chain. It simply isn't going to be a world of one chain. It's going to be a world of thousands of chains, and we've got to be able to show and prove and demonstrate, which is what we've been working very hard on. And we've been doing this in Web3 for a number of years now, is the ability to be able to allow, whether that's data or whether that's transactions, that flow, that safe flow, and where appropriate, privacy of that flow and that transaction between these various private and public chains, or between private chains and traditional technologies. And to a certain extent, the work we did with Swift was a very good, the early work we did with Swift, and we continue to innovate in collaboration with them, is a really good example of where blockchain and very significant traditional technologies that are mission critical can coexist in a very seamless way and persist and move these assets and facilitate payment without any degradation, if you like, to the actual transaction itself. It's very important.
And you're talking there about chain flow and keeping things secure.
Yes.
So let's go to banks. How can they embrace this innovation and blockchain technology while at the same time maintain their own transaction and customer privacy?
Yes, it's really it's a very important question, and it touches on a whole number of different regulatory obligations depending on where the transaction is. And of course, you've then got the challenges around not just where an asset originates from, but also you've got the challenges around where is it going. If it's crossing if it's issued on one chain, whether that's a security or a real world asset, and it then is going to be distributed to the investors on 10 chains, depending on what jurisdiction those investors sit in, they'll face different regulatory obligations under their national competent authority. And so if you just look at where we are with Europe and MiFID II and GDPR, for example, you've got a number of different challenges that we're facing as an industry. So what we've been doing, and because we've been doing cross-chain interoperability for a number of years, and we've safely been transacting, we've moved over 15 trillion in the last 5 years and not lost a single dime, okay? One of the things we've been working on, we could see this coming for quite a while, is this need for us to be able to link private chains to public chains and to be able to maintain and private chains to private chains through interoperability, but to be able to maintain the privacy that's already been, the privacy model, if you like, that's already been established and configured within those individual private chains. Now that's a very complex problem, and actually we will be hopefully bringing some very exciting news at Sibos around how we've been working on maintaining that privacy of the transaction as it crosses from one private chain to another. And that's super important when you think about things like MiFID II, the ability to make sure you don't introduce market impact by in any way compromising the privacy of a transaction as it moves from one chain to another. So what we've done is we've effectively built a capability that will allow people to maintain the privacy and also program the privacy as we move assets and cash and data between chains during their journey. And that's very important because that, for an institutional type use case, that privacy in the use of private chains, particularly where we're seeing more and more private chains, more and more privacy being introduced within the EVM space, that ability to maintain the privacy, the integrity, and the authenticity of the data is incredibly important to drive adoption within regulated type use cases. So we're very excited. It's an area we work really hard on, and we'll be bringing some very exciting news during Sibos over the next few days.
It's such a fascinating subject, and just listening to you and learning about all the different facets that come to it. And I have to say, I'm looking forward to learning more about your Sibos announcement. Angie, thank you so much for joining us.
Thank you very much, Debbie.